how to get less taxes taken out of your paycheck. All of you should be interested in this. So we're going to talk about a few things. Number one, how your W-2, and for those of you all over the world, that means being an employee, actually controls how much you pay in tax. Number two, what you can do to maximize other strategies and get these deductions that the wealthy do. And number three, how to just keep more of what you earn and stop leaning into the invisible pain, overpaying taxes because you don't know. So I'm going to start with a story that just happened this morning. Someone texted me this morning, just became a client at the big table and said, I have X dollars and do I put it to work? Do I pay my taxes? Do I put it into my IRA? So it's actually a pre-tax deduction and then invest in iFlip. So this happens all the time. So many of you just think, oh, it's okay to pay $3,500, $4,500, $10,000, because when you're used to paying $20,000, $30,000, $40,000, $50,000 in taxes, we have people that have come in that have sold their companies that are paying millions in taxes when you could have strategized a different plan. So let's go through some statistics, critically, how you affect the taxes taken out of your paycheck. So number one, the average taxpayer gets a $3,000 refund, meaning they overpaid all year. You're just giving, the IRS your money and then you get it back at the end of the year. The problem is you're not collecting any interest on it. So why don't you keep the $3,000 yourself, invest it at 10, 12% and pay it at the last minute. Adjusting your W-4. All right, so your W-4 can increase your monthly take home a lot of times by hundreds and hundreds of dollars. The IRS allows you to update your W-4 anytime, not just once a year. So your W-4 is at your control. You can put more people on, which means you're going to have less taken out, but you have to verify all of that on your tax return when you file. Ideally, you're filing in September and October by doing what's coming next, the strategies we're talking about. So I want you to just go get an IRS calculator. It's super easy, and review your W-4. What do you actually have being taken out right now, right? Claim the correct number of allowances for the dependents you have. You can't just make that up. Again, and then revisit it every time your income or family situation changes. So those are just some really strategic things you can do with the W-2. So when you have a paycheck, as you know, it's the worst kind of money because you make money, you get taxed, and you live on what's left. The better way to do it is have your company make money, activate the greatest tax code, 81,000 plus pages of tax code, and then pay tax on what's left. So you get to control where you pay tax. You say, yeah, but I have a big job. I know. So let's go to the strategy. You get incorporated. You live what I call corporate life. So if you don't want to know what corporate life is, I do once a month what's called the Millionaire Intensive, and it teaches you how to live corporate life. So grab the 2 tickets in the show notes below. So even if you have a job, right, where you individually get taxed, your company could still make a lot of money to activate a tax code so you can then have those deductions versus just being an employee. Having just a paycheck is the only way that you're making money. You actually have no tax plan. You have no strategy. I mean, you have a plan. There just isn't one there. And then also what we add is investment education to look at what assets can give you a good depreciation schedule against all that income you're making. Things that are accredited, investments like gas and oil, real estate, aviation, water, mineral rights, all sorts of amazing assets that you can use that affect your whole tax strategy. So for a lot of you, you're treating taxes as something that you just hand to your CPA or H&R Block, or you just look at it yourself and you do TurboTax and you wonder why you're overpaying taxes, because most of those processes and systems don't even activate the whole code. You have to activate the code through having a legal operating company. You need a legal reason to make money. Now, you all have a hobby or something that you do. So I don't care if you do a direct sales company. In the show notes below, I'm going to give you 8 different links of things that I do for just additional revenue. They're direct sales or just things that I buy. You can buy at wholesale. You can resell them out at retail. Why? Because the stuff I use, and people always want to know what I have and what I use and what skincare I have. And I've been a direct sales company for that. So if I'm going to buy it, why not get paid back on the other side? My point is, it could be as simple as that. If you're a good writer, I have an engineer who just, he's a great copywriter, and he started a company to do copywriting. Now, does he have to do a ton because he's got a big job? No, but he has to have a legal intent to make money. So as long as he gets maybe a client a quarter, a client a month, so he doesn't have to make the business big, but without the business, you don't get to activate the tax code. So for example, you don't get to write off your phone. Your business can write off your phone. Your vehicles, your office allowance, your technical equipment, all of that are deductibles when you have a company. So you do get to affect your paycheck by activating what we call corporate life. Now, before I give you the finale and some of the final tips in this category, this topic, I want you to subscribe to my channel, click the notification button, be here 5 days a week, take care of you and your family. Why pay the invisible pain called taxes when you can have a way better strategy? Wouldn't you rather pay yourself than pay the IRS? And then with more to yourself, you can learn to invest. Other deductions that I want you to do, I want you to maximize an HSA. If you don't have one, get one. If you don't have an IRA, a 401k with your company, you maximize those that you have control over. And then any of the pre-tax benefits for health and commuting costs, you get to write all that off. So really pick a cash machine, a business that can supplement your current job situation. You'll be successful in both. We're not asking you to quit your job. We're asking you to add corporate life to your entire tax planning. And then how do you keep more legally? You can do quarterly filings, or you actually file tax for that company in September, which then flows through and you pay in October. So you aren't getting refunds in our models. You are paying in September, 8, almost 9 months after the tax year closes. So like right now, 2025, we're in October 2025 filming, all of our community is in tax planning right now, looking how do they make sure 2025 is coming in at the best strategy they have? Do they need to do other investments? Do they need to fund their IRAs, their 401ks? What's going to minimize the absolute amount that they have to pay in tax? Taxes are controllable. You have to lean in and learn. If you have any questions about any of this at any time, go to askloral.com, ASKLORAL. Ask a question, make a request. I also just invite you to go up and grab just any topic on our playlist. And I have so much about tax and corporate life and corporate structure for you to really just consume all that you can. The more you lean in, the more you learn, the lower your taxes are.